Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, December 24th, Christmas Eve. The year is 2021. Let's talk trading. It's time for the weekly wrap up. These videos are for educational purposes only. Your results may differ from mine. So, we have a really big weekly candle here. Look at that body. It completely covered last week's upper wick. All the gaps filled this week. And right now we're 151 pips above the weekly open and 50 off the weekly high, 214 pips off of the weekly low. Quite the movement. This week, we broke out of the opening range for the week to the north, and we also broke out of the opening range for the month. So we broke the week at opening range at 32.44, broke the month opening range at 33.51, and we're sitting at 33.87 at the moment. As far as the year goes, we're 255 pips below the open, 92 pips above the monthly open, 151 above the weekly. Now, yesterday, I mentioned that we actually got into that inside bar range for 2 months ago, but you see it pulled back down and actually is broken through the low of the inside bar of the week, which was 5 weeks ago. Right now we're 3.6 below it. So, but we're 40 pips below that monthly inside bar. So right there, the heads up I gave you yesterday was, to look and see what happens. Today's range, Christmas Eve, no pairs over 100 to be expected. The buy zone didn't really pay off much, just a couple pips in either direction. We've only got 35 pip range, but once again, it's Christmas Eve, and who really trades on Christmas Eve, right? I even think Walmart took the day off, had to tease him because we all know he's a trading addict. On the rat zone, range is too low. And we've got some crazy movement. You just saw that candle jump here. Pivot trading plan. Actually, we're right around the monthly pivot. You can see how price has been oscillating across the 39, call it 9 or 33, 9, call it 96, 33.96. But we did take out the monthly pivot yesterday. We took out the weekly pivot. And today we took out the daily pivot. Yesterday, though, we missed a pivot. So we've got a missed pivot this month, missed daily pivot. In and out of the upper wick zone. That's the upper daily wick zone. The range, though, this is where things are kind of interesting this week. We had 264 pip range, 83 percentile. High minus the previous high, we broke out 63 pips. Low minus previous low, we didn't break out. We only missed it by a pip. So you can see here, price tried to make a new low, failed, and reversed hard. At the moment, high minus close is 41, and close minus the low is 223. Now 224. For the trading that weekly open crossover, high minus open paid off to 201, open minus low paid off to 63. So once again, just trading those simple horizontal lines can prove to be profitable. Now, somebody asked a question, I believe on Facebook, was about setting, your stop loss. And I think some people might be getting confused when it comes to risk management. Risk, we're going to define that on how much you're willing to lose on a trade. So in other words, say you've got $1,000 account and you're willing to lose 2% or $20 on a trade. Let's say you're trading mini lots. So you put a one mini lot trade on and you're willing to risk 20 bucks. So your stop loss is going to be 20 pips away. So if your stop is hit, you lose 20 bucks. Now, the reason that people get confused about this is sometimes they'll look at the chart and they were saying, well, here, place your stop below the previous low or above the previous high if you're going short. And so maybe in one situation, it might be 10 pip stop, and the next situation, it could be a 7, and the next could be 13, and on and on and on. And so they're like, well, where do you place your stop loss? Well, if you place your stop loss based on a position on the chart, then if it's more than what you're willing to risk, then you're going to have to adjust your position size. See, position size is risk divided by the stop loss. So if you're not going to do that, then you just put your stop loss in the same place each time. If you're going to save the same, if you're going to trade the same lots and always have the same risk. So for example, well, let's just take a inside bar. Let's see, that's a pretty big movement there. Let's look at the buy zone. Say you take the weekly or the daily open cross here. So price moved in. So right here, you say, okay, I'm going to go short. And if price comes up here into the buy zone, I'm going to exit out. So if price went here and you failed to take profit and price went here, you got stopped out. Because a lot of people go, when I first introduced the buy zone, they're like, where's the stop loss? And to me, it's like, what do you mean, where's the stop loss? Because if this says go short and this says go long, if you're short when price is up here, then you're not paying attention. To me, it was built in, but to others, it wasn't so obvious. And of course, there's always the people who'll say, well, if you do this, you're just going to keep getting, whipsawed and seesawed and you're going to get cut up. Well, that may be true. And for some reason, the computer's responding really slow. Maybe it's because of it's Christmas. I'm not sure. Or Christmas Eve. But the thing about it is, you can look at this and you can say, well, if I were to take this trade, do I want to take the 3 or 4 pips? And then if I took the trade here, it went back up, then you see it came back down. And today is one of those days where the spread is just wacky. I think we're probably coming up near the end of the day. And so it's probably not going to show anything, but yeah, you can see here we've got a but a 20 pip spread. So these don't really make any sense, but usually you don't see this kind of movement because the spread isn't wacky like this. But the point is that when you place a trade, it doesn't matter if you're using the buy zone or any method. The reason you got into the trades goes out the window, and now you're in the trade and you have to manage the trade. And that's when you set your stop and or set a TP or take your profit when you can. So I hope that helps explain the whole idea of where to put your stop loss. And so, if you just look back across here, you can see what has happened during the day. And so, as I mentioned, today probably isn't the best day to show that, just because of the wacky spreads that we're having at the moment. But, the thing is, price has to range based on statistics. And sometimes it ranges a little, sometimes it ranges more, sometimes it ranges a lot, but it will range. And that's what we're trying to take advantage of. So, for example, you could be trading, the wall mall method, or just the sweet spots, candle color at the line. And it's real simple. If price opens here, then this would be the long line, this would be the short line. So here you got to pay off. So price opened here, that would be the long line, this would be the short line. That may have paid off, you may have had to scratch, or maybe you even got stopped out. And then you picked it up going the other way. In this particular case, you can see price went across this line, pips to be had. In this case, price open, went across this line, failed to go across this line. Maybe you got stopped out here. Price went across the first line there, pips to be had. Here, price went across. Maybe you got a pip. Maybe you stayed in the trade because maybe since it didn't cross this line, you didn't get stopped out here. Maybe you added back in a second time, picked it up here. Price went up. Maybe you got stopped out. Maybe you scratched the trade here. Opportunity to take pips. I mean, this is what happens. This is trading. It's not going to work in your favor each and every time. But that doesn't matter. What matters is over the course of the session, does it work in your favor more than not? Do you take more pips than you lose? And that's just something that you have to understand as a trader. Doesn't matter whose system, whose method, what indicator, or what instrument you're trading. That price action is gonna happen. Candle's either gonna break out of the high or low of the previous candle, or it's not. That's price action, plain and simple. So, fellow traders, I wish you happy holidays. I hope you have a fun and safe weekend. I hope Santa brings you all the presents you asked for and none that you didn't. And at least you didn't get anything you really didn't want. So, and I want to thank everybody for, throughout the year, the support, the kind words, the questions, the feedback. I appreciate it. So, when you come back to your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.